The US Federal Reserve keeps interest rates steady amid elevated inflation risks. Meanwhile, the United States and China are set to hold high-level trade talks in Switzerland. And we look at how Nigeria's cocoa boom is transforming lives and fortunes. Hello, I'm Taiba Aiden with the latest business and finance news here on TRT World. Markets were mixed on Thursday after the US Federal Reserve announced another pause in rate cuts and warned of higher risks to its inflation and unemployment goals. The Federal Open Market Committee kept its benchmark overnight borrowing rate in a range between 4.25% to 4.5%, where it has been since December. Fed Chair Jerome Powell warned in his press conference that if the significant tariff hikes remain at current levels, they could lead to a slowdown in economic growth and an uptick in long-term inflation. The dollar edged higher against the yen and euro following the central bank's announcement, while oil prices fell by more than $1 amid economic uncertainty. Investors are also eagerly awaiting updates on the upcoming US-China trade talks set to be held in Switzerland later in the week. Let's get more on this now with Josh Mahoney in London, Chief Market Analyst at Scope Markets. Good morning to you, Josh. Now, the Fed's decision was largely expected, so how have markets been reacting so far?
Well, by and large, we're seeing relative calm, I would say. It's not necessarily a case of seeing huge volatility off the back of this announcement because, by and large, as you alluded to, this has been expected when it comes to the policy front. Then you think about what's the outlook going forward, and it was always quite likely that they were going to come out with an outlook that is relatively cautious in nature just due to the sheer uncertainty that is faced by the Federal Reserve right now and faced by all of us, quite frankly. We don't know if there's going to be a trade deal between the US and China. We don't know if we're going to see tariffs raised or brought lower. We don't know if we're going to see those 10% tariffs around the world hiked or taken off. We don't necessarily know whether it's going to cause a huge spike in inflation or whether the businesses are going to eat up those costs. There's a huge amount of uncertainty. It's not necessarily the job of the Federal Reserve to just presume it's going to work out one way or another, but certainly it does put them in the camp of some people potentially saying they're relatively late to react if we do see those developments turn into weaker growth or higher inflation or potentially inflation being tamed.
And in his outlook, Powell warned of inflation and slow economic growth. So how does this impact the ordinary American?
Yeah, so essentially the Federal Reserve have a dual mandate, right? So they have to keep inflation under control, generally around that 2% target, but they also want maximum employment. So essentially they don't necessarily want to let the economy run away with it and dampen to the degree that it could do under these new measures. So, you know, what will this do for the Fed? That's very different to what this is going to do to your ordinary Americans. Your ordinary Americans are likely to feel the pinch when it comes to higher prices, likely to be able to afford less. And that comes unless we see a significant rise in terms of wages over in the US to catch up with that. So this is essentially a case of a decline in the standards of living of your ordinary Americans unless we see a similar bump in terms of wages, which is questionable whether we're going to see businesses do that. And ultimately, if we see that bump in terms of wages that match the rise of the cost of goods coming into the country, then you're having a potential inflationary spiral, which is exactly the thing that the Federal Reserve will want to not happen.
Right, we'll have to leave it there. Josh Mahoney in London, thank you very much for your analysis. Markets are holding their breath, not for breakthroughs, but for signals as high-level talks between the US and China loom. At the center of it all is President Trump's refusal to budge on aggressive tariffs. The numbers are massive, and so are the potential consequences for global trade. The United States continues to impose a 145% tariff on Chinese imports. Trump has ruled out reducing this figure to encourage talks. That rate has priced out many Chinese goods from the US market, hitting supply chains and pushing consumer prices upwards. Trump claims the US was, quote, losing $1 trillion a year before the tariffs. But recent data shows a decline in bilateral trade volumes, not necessarily a win. Economists warn that lost imports also mean lost productivity and innovation in key sectors. Treasury Secretary Scott Bessent is due to meet Chinese officials in Switzerland. Beijing says the US requested the talks, yet remains firmly opposed to the tariffs. With both sides entrenched, expectations for compromise remains low. Let's break this down with Andy Mark, Senior Research Fellow at the Center for China and Globalization and a professor at the Beijing Foreign Studies University. Now, Andy, why is Trump so adamant on keeping tariffs this high?
Well, I think there's two reasons. So one is tactical, of course, looking to maximize his negotiating leverage. But the other, I think, is deeper and more strategic. So if we step back and look at the challenges facing the United States, it's well recognized that it's facing three existential and interrelated challenges. One is the budget deficit, the unsustainable government debt. The second is a sclerotic public sector. And then the third is deindustrialization. So I think that Trump sees strategically that tariffs will play an important role in addressing these problems. In the short term, I think, again, to maximize his or the US's negotiating position. However, I think it's also largely recognized around the world that this is to a large degree, perhaps not a very tenable position, that the U.S., and we'll probably explore this more, will not be able to actually maintain a strong position in the trade conflict with China.
Right, and these talks are expected to begin this weekend. Do you expect any real progress to be made?
Well, I think Secretary Bessent, people on the Chinese side as well, people all around the world do hope progress can be made. And I think here, let me return to my earlier point of why I think that despite strong rhetoric from President Trump, the U.S. side is under tremendous pressure to concede. So it's not just American consumers and businesses that most people think about, but really it's Boeing. It's the American farmer exporting soybeans to China. And it's many American defense companies and the U.S. military writ large dependent on rare earth metals and their products from China that are putting, I think, acute, perhaps even unbearable pressure on the United States. So if we look at it from that perspective, I think that can give us cause for optimism that this situation cannot go on for too long. And one other quick thing to add, too, is that in the next month or two, we'll start seeing perhaps store shelves in the U.S. Starting to become much more empty because as these tariffs took effect, it takes time to ripple through the supply chain. And I believe starting mid-May, we'll start seeing some of that impact. And again, as that pressure builds, I think there's going to be enormous force on the U.S. to reach some sort of accommodation with China.
Right, Andy Mark from the Center for China and Globalization. We will have to leave it there. Great to have your thoughts. Now a quick look at some of the other top business stories from around the world. Shares in Google parent Alphabet fell more than 8% after top Apple executive Eddie Q said search traffic on Apple devices had dropped. He told a US court that users are shifting to AI tools like ChatGPT and Perplexity. The comments came during an antitrust trial that could force major changes to Google's search business. Alphabet also lost $140 billion in market value following the testimony. Brazil's central bank has raised its key interest rate to 14.75%, the highest level in 19 years. It's the sixth straight hike as the bank tries to control rising inflation and manage trade uncertainty tied to US tariffs. President Lula has warned that high rates could slow growth, but the bank says inflation remains well above its target. The Australian Securities Exchange has unveiled reforms to revive its sluggish initial public offering market and boost global competitiveness. Key changes include speeding up the listing process, easing requirements and giving more access to everyday investors. ASX hopes the move will attract more capital and keep up with major global markets. And the All Blacks may rule the pitch, but off it, they're now in the red. New Zealand Rugby has reported an $11.6 million loss for 2024 as a booming year in sponsorships wasn't enough to offset rising fixed costs and shaky returns. Critics say the iconic team has failed to fully capitalise on its global brand, unlike top-tier sports leagues abroad. In London, Turkey and the United Kingdom have agreed to hold negotiations aimed at modernising and expanding the scope of their free trade agreement by the end of July. Turkish Trade Minister Ömer Bolat spoke to TRT World in London.
Turkey and UK's total trade volume surpassed $37 billion last year. And following Brexit, the two nations have become key trading partners. And to take this partnership to the next level, Turkish Trade Minister Ömer Bolat and his counterpart Jonathan Reynolds met here in London. And to get more about this, we spoke to Turkish Trade Minister Mr. Ömer Bolat.
Turkey and Britain, UK, have excellent relations in politics, in diplomacy, in economic relations, trade, investments, tourism, finance, in all fields. And while being as a member of the European Union, the United States has always been positive vis-à-vis relations with Turkey. After Brexit, both countries had to sign a free trade agreement on industrial goods trade. And today I had a very fruitful meeting with my British counterpart, Mr. Jonathan Reynolds, and his delegation. And we signed two agreements. The first on sectoral annexes to the free trade agreement in automotive products and in chemicals, and the other on the alignment of technical standards, regulations, not to erect trade barriers in industrial goods trade. Apart from that, they're working on having a mandate to start for the negotiations on the extension of free trade agreement from industrial goods also to services sector. While waiting for the mandate, we decided reciprocally to hold first round of talks on the extension of free trade agreement to services, investment, e-commerce in Ankara in the middle of this year.
So it's to be continued in July in Ankara?
Hopefully, and also we agreed to hold the 8th JETCO meeting, 8th session of the Joint Economic and Trade Committee JETCO meeting, along with a business forum, again in London before the end of this year.
Nigeria has experienced a striking cocoa boom in recent years, driven by rising prices as production elsewhere in Africa tails off. Rupert Stone has more.
They call them cocoa boys. These are the farmers who have recently grown rich on the back of Nigeria's cocoa boom.
Cocoa boys, we have a chain. The farmers, the buyers, the cocoa store owners, the exporters, all of them are linked to this cocoa chain. And everybody who is part of this cocoa chain is benefiting.
Prices for cocoa have spiked in recent years, drawing people into the industry. This Nigerian man studied civil engineering, but returned to his homeland to open a cocoa farm. He hasn't looked back.
I haven't left civil engineering. I love it. But I have more interest in cocoa now because it's generating, if you pay annum, it's generating more money for me by the assessment of last year. The little effort put I saw what generated. So with that, if I put more effort and consistency, showing commitment to the farm, then I'm sure of having more outcome.
Cocoa prices rose more than fourfold from 2022 to late 2024, driven by a fall in output in Ivory Coast and Ghana, the world's top 2 cocoa producers. Rising prices benefited cocoa farmers in Nigeria, who were also helped by a devaluation of the local currency, which made exports less expensive. The result of this sudden boom has been a new elite of highly affluent farmers.
Yes, you can consider me to be a cocoa boy. You can consider me that, because I know that now, when you call cocoa, now, people see you to be a big boy. Here in this locality and outside the locality, it wasn't seen like that. We're not known to be the big boys. But now, cocoa, when you hear about this cocoa, there's this mentality, this understanding that comes into you. Those guys are big boys. So if you're calling me a cocoa boy, I'll accept gladly.
Nigeria is now the 4th highest producer of cocoa in the world. It remains far behind its rivals, but is catching up fast. Rupert Stone, TRT World.
Let's go back to our cocoa story now and speak with Mktar Muhammad, an international finance and economic analyst in Nigeria's commercial capital, Lagos. Now, Mktar, firstly, what factors contributed to the surge in cocoa prices recently?
Well, thank you for having me. I think the challenge with the cocoa price recently has to do with the low farming season. We didn't have a very good farming season for the cocoa farmers. The farming season was a little bit bad. Then we have issues that have to do with insecurities, and a lot of farmers were not able to go to farm also. That also is contributing to the challenges that we are having. And you are seeing and so that leads to not scarcity. Demand was high, demand was high, supply was low. And also that has also been the challenge. And also funding also to expand also have been on the high side because of the high interest rate that some of the farmers, large-scale cocoa farmers, need to access the loans from the banks.
And how has Nigeria managed to secure its position in the market?
Well, I think it has to, if you look at us and other African countries, we are still struggling to secure our position because, again, we have allowed oil to be one of the main drivers of the Nigerian economy. So definitely we're having challenges with securing those points in the market. But government also have been supportive in one way or the other, trying to help farmers, bringing about a lot of policy that is driving most people to farming, especially the elite. The elite are now becoming more involved in farming. So that also is helping. With that elite involved in farming, that means they also have a lot of liquidity to expand some of their farming compared to when we used to have just peasant farmer farming the cocoa. I think that has been one of the key drivers of what we are seeing.
Right, and in what ways is this cocoa boom changing up the local economy?
Well, I think it's bringing a lot of people out of poverty. It's giving jobs for those in the rural area, and that is where predominantly we have the farmers in Nigeria. Most of them are located in the rural area. So when you see this such now, a lot of rural-urban migration is coming very low now because they have also a means of livelihood. Like I said, they are mostly farmers in the rural area. So a lot of them are no more coming to the city because with this expansion in terms of cocoa farming and culture, they are earning a living, even if it's not comparable to what they used to have before. But I think they are now beginning to see that, okay, once you continue to farm, you have a means of livelihood, at least to put food on your table.
Right, and we heard about so-called cocoa boys. What does it mean to be a cocoa boy in Nigeria?
Well, that's a slogan being used for most of the affluent farmers. When you say they are the cocoa boys, they are talking about those those affluent Nigerians that have gone into cocoa production, and so you call them the cocoa boys because they seem to be making a lot of gain in the cocoa production. But again, you have to know that some of all these cocoa boys have been in this farm, because cocoa itself is a cash crop. It doesn't just grow in 6 months. It takes a lot of that. So they call them the cocoa boys because, again, we are suffering from FX challenges, and this non-oil sector, which is the agriculture, and also cocoa is beginning to earn FX into the Nigerian economy, and they see them as the big boys. So they call them the cocoa boys.
Right. Mktar Muhammad, we will have to leave it there. Thank you very much for being with us.
Thank you for having me.
Amid the ongoing violence between India and Pakistan in Kashmir, Pakistan suspended flights in and out of Karachi, Lahore and Sialkot. They are due to resume around about now. But the rising tensions between the two nuclear powers are of great concern and markets are jittery. Moody's, the global ratings agency, warns that if tensions with India keep rising, it could set back Pakistan's chances of getting its economy back on track. They say it could slow down growth and make it harder for the government to stabilise the economy. Amid this backdrop of regional friction, diplomatic efforts are underway elsewhere. Pakistan and the United States have reportedly held high-level trade discussions, with both sides expressing a commitment to strengthening their economic partnership. Turning to the financial markets, India's benchmark stock index, the Sensex, has shown a degree of resilience on Wednesday. In fact, it closed higher in the wake of India's reported Operation Sindoor, but investors in India's defence sector appear more cautious, with the Nifty Defence Index experiencing a downturn. The ripple effects of these geopolitical tensions are being felt in the global energy markets. While no direct threats to oil production or supply routes have been reported, analysts link the rebound in prices to regional instability concerns. And one of the largest sources of revenue for India and Pakistan comes through backdoor trade, where goods are routed via third countries. It generates billions of dollars for both economies, but a recent Indian ban on Pakistani imports may threaten this. It comes after New Delhi blamed Pakistan for an attack in Indian-administered Kashmir that left at least 26 people dead, as Emre Boz reports.
Backdoor trade, also known as indirect or roundabout trade, involves exchanging goods between two countries through third-party nations. It bypasses direct trade restrictions, high tariffs, or political barriers. For India and Pakistan, goods are routed through countries like Dubai, Singapore, Sri Lanka, or Afghanistan. For example, Pakistani textiles may be shipped to Dubai, relabeled, and then exported to India. According to the Global Trade and Research Initiative, backdoor trade generates $10 billion a year for both countries combined. Direct trade declined due to events like the 2019 Pulwama attack, after which India imposed a 200% tariff on Pakistan. Between April 2024 and January 2025, direct trade fell to just $0.42 million. But now, this latest incident, the attack in Indian-administered Kashmir, threatens this unofficial trade relationship. India blames Pakistan, saying it's banning all direct and indirect imports from the country.
I congratulate our Prime Minister. The day before yesterday, we appealed that all trade with Pakistan, whether direct or indirect through Dubai, must be suspended.
No country should buy goods from Pakistan. Pakistan uses the money it earns from us to generate militancy, which in turn harms us. We do not accept it. No goods from Pakistan should be imported to our Jammu or the rest of India.
Pakistan has already retaliated, banning imports from Indian origin goods either directly from India or via third countries. The government says the move is to protect the country's national security and public interests.
Pakistan's airspace will be closed with immediate effect for all Indian-owned or Indian-operated airlines. All trade with India, including to and from any third country, through Pakistan is suspended forthwith.
As tensions escalate, this once profitable trade may come to a halt. Emre Boz, TRT World.
Signs of change are beginning to show in post-Assad Syria. Some of the most significant shift is a return to community volunteering. For the first time in years, local teams are stepping in to help in the country's rebuild. TRT World's Noor Kormosh reports from the coastal city of Latakia.
Syrian volunteers are finding their feet in their newly liberated country. Groups like these never existed under the Assad regime, where grassroots mobilization was tightly controlled and often criminalized. Teams are finding space to organize openly in a new political reality. Their work includes community training, awareness campaigns, and planning local aid drives.
After the fall of Assad, the first thing I did was establish this team. The new leadership is offering a lot of support for young initiatives and voluntary work, and that encouraged us to keep going. We finally feel that the country is ours and that we can rebuild it.
These local initiatives offer more than services. They provide an outlet for participation and a sense of ownership in the country's fragile recovery.
After the fall of the Assad regime, we were finally able to unite our efforts as young men and women to build our country. I urge all young people to volunteer and have a say in the future of the country.
And as new space opens for civic engagement, many are seizing the opportunity to serve. With fewer restrictions and a growing openness to grassroots efforts, a different kind of approach by Syria's new leadership is enabling these movements to take root.
We are working on enabling humanitarian effort across the country. In Latakia province alone, we are facilitating the work of over 200 teams and NGOs. And the number is much bigger across Syria. We try to empower the youth and channel their energy toward rebuilding their country.
Those young men and women know their efforts are modest, often under-resourced, but care that they are making a difference.
On Syria's long road to recovery, volunteers say it's their efforts that quietly lead the way. These teams may not make headlines, but their presence signals something profound, a return of trust, of solidarity, of people stepping up for each other. The return of volunteer teams may seem small, but in truth it marks a fundamental shift in a country desperate for a change. Newcomers to World, Latakia, Syria.
And that's all your business news for now. Thanks for watching.